Hmm. Restarted. All right, we're back. Kind of. What was that? Oh, nothing. I'll wait a minute, see if other people want to join. It's kind of a mess. My internet's just trash. I don't know. Nothing I can do about it right now. I have tried, I promise. And I've been looking. I haven't found anything yet. So maybe one day it'll eventually not be an issue, but it is right now an issue. Sorry. All right. So look, no more sensationalist kind of stuff. We're just going to talk about kind of like bare bones here because I think the implications of this are pretty profound, but I would be not on it. It wouldn't be honest to tell you that I've kind of figured it all out and I've got it done. I don't have it done. It's a Friday. I'm probably not going to get it done. I'm going to work on this though because I don't see it as um, impossible. Like this looks like something that can be achieved in some ways, and I think that's important to note. And what I mean by achieved is that there's two things, there's two huge questions here that most people are going to have, and I've got them too. Okay? So the first major question is what does this mean right now? Does it mean anything right now? Okay? And I went through a lot of um, I went through a lot of ideas yesterday. The only one that kind of stuck beyond what you guys have already heard, and that's I already talked about it in detail in the first part of this video before I get cut off. The only part of this that I think that I haven't really addressed has more to do with kind of like a macro outlook on perhaps on what we see as the main trend here. Because if we did indeed shift down, which seems likely, then these variables probably wouldn't work the same way. Like you wouldn't be able to use, and I had done this before. So again, this isn't brand new. I had done this before when we were using the top one. But it would be important to note that the shift itself would mean that the essentially like the tops and bottoms of trends and things like that would be different. And again, I've looked at this before by kind of implying that this really should be higher, and I'm going to do it in reverse now and implying that the rest of it be lower. And that's something that I think you can do for sure. One of the implications here would be to go back and look at where that bottom is here, the original bottom, versus where we are now, right? You can see that that effectively is $4.73. It probably is pretty darn close to the 491, which also makes sense. Why use that level at all? Why have 491 at all, right? Why that number? It's a weird number, right? And it's kind of a strange number. And he specifically used 491 because that's what mathematically came up and it continued to work. I didn't pick 490, I didn't pick 5, but I guess you could just say 5, okay? And you go back and you look at where this implies backwards, and that's where it ends up being. I know it took a little bit of detour here, but I actually went through and what I did, this is very strange. Even now I'm looking at it like, what the heck did I do? I went, I don't know exactly how I found this, but I went into a series of um, estimations on where this trend actually is and like where the shift in the middle here was, and I found certain variables worked really well, and I was using like the all-time top and like the previous trend, and I was like, if you separate it based on kind of center mark to center mark, this should work. Long story short, this is what I came up with. I'm not convinced that it's done. I'm not convinced that it's 100% right. All I can say right now is that maybe, maybe it matters. The more that I looked at this, the more that I started to think about what was going on the day of the reverse split and the drop, and they shifted it all down. And then I started thinking about how like that shift really represents an equal part. If you go back and you look at where this is, this still would be a breakdown. And that's really important. So I'm going to hide this, I guess, for just a second. Maybe, you know what I'll do? I'm going to copy this so I can mess with it. And then I'll take this one and I'm going to hide it. Because the two questions, again, that I would want answered are, what does this mean like going forward? And I think that the $1.80 question is a good question. I think that that's always been a good possibility. But I also think that that's not necessarily the answer just because it's there. I think it's a target, and that may not make you feel like particularly confident about it. I think it's a target that matters. But I also think that it's very possible that kind of like what happened in 2020, there's probably some low targets that may or may not be actually met. It just depends on what happens with the volume and the operators, because the operators, again, oftentimes will take it up before bringing it down, and if the iteration is out of steam, they'll take it back up before running down again. But I do want to point out that even in the midst of all that, I had some pretty strange, and I'm not sharing this stuff, but I had some really strange stuff happen here with this top and looking at what was going on here in this top versus like, and really according to Ape and all this other junk, there's a lot of weird stuff that happened here. I think that it sets up for the shift. I'm not going to get into that today, so don't worry. It is strange. But what I will say is this, and this is just a really simple kind of straightforward, hey, you need to take note of this, I think, is even if you use like a shift value, and I'm just using a parallel just to have it, it doesn't have to be like, this parallel doesn't necessarily mean anything. Can I raise my volume a bit? No. It's probably yours. Somebody's getting me, man. It's because it's chopping in and out. When it drops frames, sometimes as I'm like raising into, like I'm speaking into a microphone, right? So if it drops before my volume reaches like the peak of a word, it could sound really low. But my volume is like maxed out, so yeah. Sorry. And it's still lagging like crazy. This is ridiculous. Just breathe, Booksy. Just breathe. So irritating right now. Yeah, I don't know, man. This internet's just terrible right now. It's probably not going to get better. Let's just try to get through it as best we can. If it goes off again, I may not come back on. It's looking bad right now. I really didn't even want to know. Come on. Sorry, guys. I'm just really, really irritated. I'm going to try to stream. This is garbage, but I'm going to try to stream it at like a lower output. I don't think it's going to matter. All right. Well, it is what it is. If it drops, it drops. I'll keep an eye on it. This is not professional, but then again, I've never been very good at this, so here's what I would say about this. It's not, although it's not perfect, again, using the shift value, even if you use that, it really represents like kind of a drop down here. What's, I think, kind of maybe more interesting to some degree is that if you kind of ignore, let me show you what I mean. If you use a trend here and you kind of ignore like the new section. Yeah, right. I'm not sure it'll be any better. Satellite stuff doesn't always work better. Who knows? Maybe it would be better. I really don't know why. Every day around this time, middle of the day, it craps out. I called and asked them, and they had no answer. And it really irritates me because I genuinely think that they're like throttling me or something, and it really ticks me off. And they're not helpful at all. They just try to sell you more internet, you know? Let me see if there's one more thing I can fix. Hang on. Well, that's not really helpful either. At least it seems to be fine for half a second. Right. Got it. Got it. Okay. I mean, at least it's somewhat moving, so that's good. All right, I'm just going to keep going. If we're not dead, we're not dead, so let's just keep moving. I don't know what's going on with it, but that is what it is, so. When I charted this originally and looked at the wave formation, I think in my brain I was fairly confident that the wave was going to be coming up pretty high, and I had used this kind of methodology. I don't think this is wrong. This has in the past been correct. That being said, in light of like what is new here, there's a couple things that need to be asked about the chart. So like number one would be, can you somehow find a major price target with this method? Or is this only for certain things, you know? And how do you use the chart shift in this if the chart shift is kind of separate, if it like shifted down? Well, the good thing about the downshift is that it didn't really disrupt anything. I already kind of demonstrated it earlier. It seems to be the same. Like it seems to me to be the same. So I haven't seen anything that's made me think otherwise except for shrinking here when it's getting smaller. I don't see anything else that really stands out. But all that being said, there's a challenge of perhaps knowing, where is this going to eventually go back to if it goes anywhere. And I don't have, again, all the answers. One thing I would say is that this drop down right here represents a smaller portion, right? It's a lower range. So one of the big questions is, can you do a macro version of this, right? Can you do like a big picture version of this? And I don't know. Maybe you can. I'm going to do my best. And then can this help determine, we'll just say current spring level and or break target. I think the answer to both of those questions is probably yes, but I don't know exactly what that's going to look like just yet. So one of the bigger problems is that I have again, I already showed you guys that this technically had the same motion, and I already used it to find the target at 4. Well, the same thing would be applied here to find that target that went to 12. But it wouldn't be the same to find like a bigger target unless you think this is accumulation. Because remember, in 2020, it does go back up early on. Remember? So like early on, it does go back up, but it never hits like this original drop ledge. It does go back up though. So I mean, there's that. And I mean, it goes back up to near the top, and then it drops back low again, and then it comes way up. So are we looking for two completely different targets here? Well, the answer is yeah, we kind of are, because in this case, you don't have, this would be your drop, like your major drop ledge. But the problem is that this isn't really a valid drop ledge anymore because it shifted down. And I don't think it makes a lot of sense to use this either. You could, and I've in the past kind of rejected this idea, but you could maybe use this one. Because technically if it dropped down once, that would be fine. So alternative here would be that it could come up to $46 at some point in the future. It's possible. And then the last one, which is probably the most reasonable, would be the $20 mark. These are the only ones that I think that you really could maybe use and say, yeah, I think it's possible it comes back there at some point in the future. However, there was another thing that's really important, which is that when we did this, and I couldn't tell you for sure, but when we did this back here, we used the bottom. We didn't use this particular level from like way up here. We really used like the ledge that dropped down like into the final range, which is very low. Now you could have used this, I suppose, and considered that it goes back up, and I did do that over here. But for us to do that in the current time frame, I guess what I'm trying to say is like this is sort of the only LSPY type macro thing that we have is right here. Like that's it. And so it's very difficult, I think, to make an argument that it needs to come back up to here because there's like a triple motion that happened right there. It already rejected off of this 1, 2, 3 times, maybe 4. So again, that argument is kind of meh for me. And I've talked about this before because I've been saying like, I'm just using the top one just because it's clear. I could use this one. But I've been saying that before because I think we talked about this previously, like how I thought this could have been the level that they were trying to go after, but then they ended up abandoning it if they did the shift. Because this goes back to like the original, this $80 mark goes back to like the original LSPY level as well, back over here. And I think before I started messing around with chart shifts, I thought that might be it, but that's where APE was created. And it creates this sort of wall for us very neatly goes over the top of the January build out, so on and so forth. So get to the point, right? Well, the point is I don't have the answer yet. I mean, that's the point. I went and looked at this yesterday. I found that this was an absolutely valid way to look at things. But I have to kind of take consideration to the fact that, well, while I don't have certainty, so to speak, I do think there's a chance that this comes up pretty high, but I also think that there's a pretty decent chance that the reason this was squashed the way that it was is because of dilution values. And we may not see a recovery that represents, let's just call it like a horizontal recovery. So normally, like I would think this horizontally comes back here, but we really don't have a way of knowing if these dilution values are kind of flattening out this graph. Like every time this company is diluting, is it really dropping this variable rate, right? So it's not going to be an easy answer, because in the past I would have been like, yeah, it's right there at 1950. But now I'm looking at it thinking, well, that's true. It is there, but the problem is that I can't know for sure, and neither can you, I don't think, unless you're just really, 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 really good, like you're an actual market analyst and you just know what to do. I don't know how to do it. Like, I don't know how to effectively go in and sort of figure out exactly how dilutive efforts would change the valuation on this particular thing. It's not a cop-out. It's just the truth. It's not a cop-out. It's just the truth. What I could say, though, is that there's a... so, like, when I look at the big picture, can I do a bigger version of this? There is kind of a method to, like, the madness that I was just doing, which is, if you think about this as a series of cat ears, it actually makes a lot of sense what I'm doing, because the drop ledge is really just the place that cat ear kind of enters the final phase. And I've used this diagram before, but this diagram actually does apply to the very first range that AMC ever had. It's just really flat, you know. Sometimes I'll do it like, usually I'll do it like this. You'll see like this really high pump, and then it'll come down. And we've done this diagram before. This is a correct way to draw it. It's one way that we see it appear. Another way would just be like an M-top. I've seen them be much more mild, where the first move and the second move are pretty much equal. And we kind of got that in the second part of this. Like, I don't know if you guys remember a long time ago, but I actually used to draw it a little bit differently, because I would draw a paw, and then I would draw ear 1, and then I would draw ear 2, because it was based on Bongo Cat. And the paw was like this buying climax, and then this was whatever happens afterwards. It's the same idea. You can see that ledge right there, but some people might look at that and say, well, that looks like the ear 1, ear 2. The issue being that could happen. I mean, and this is developed over time as well, is like sometimes that initial upthrust isn't really like that different from the second ear. So you get this kind of breakdown here. This is usually when it drops the trend. So it drops the trend, and then sometimes it comes like right back up, you know, and it could be either an early SOS or like a UT or something. And then you're kind of left like without a proper buying climax. And this tends to look a lot flatter. It doesn't always go down, by the way, but it could, right? So like there's a lot of different ways that this same kind of top appears. And the most important thing is to understand, like, this is a buying climax, and if it goes too high, it's often distributive. Like, this is what happened to us back here. We went way too high, and then the cat ear, as a result, is like this super, super low nonsense, right? That happens right here. We have other examples where there's a second and third, you know, motion here that are not particularly dramatic. They're kind of flat. And then we see that sometimes when it's bullish, you see the exact same thing, but it actually goes your way, which is like a big push and then an ear 1, ear 2 that crosses up and runs. So the reason why I'm bringing this up is because the original AMC drop-in that we were talking about earlier, I used that to kind of find like, hey, it's a macro target. It does give you a macro target, and it's pretty effective. It's actually a very effective way of finding that target. If you're looking for where would it go next, right? And then where could it go in the future? This worked really well. This is, in essence, like just a gigantic slow cat ear. Like there's 1, 2, and you can see the chop even on the second one just kind of being like flatter. You can see it. It's not complex. There's a weakness in between the two. It busted through lows. Early on in the stock life, there's a weakness right here. Then it takes it back up to sell down. And then it eventually comes back to that level and drops. And that's where you have the backup, the hook, LSPY, if you will. Okay, but that's a cat ear as well. So the specific place that we're looking is right where it drops, for the most part, like right where it drops that range. That's kind of the place where during this time period, you have the ability to find that midway point. You can see right there, it's like halfway between the two. That's consistent with what we were talking about before. That would give you a sense of where could this go if it drops. During this time period on the walk down, you're going to get a series of LSPYs. Those are also good. And all of those worked in both current and later time frames. So it's an effective way to do it. Like these ledges are being created. You need to join our Discord group because it'd be a lot easier for me to answer those questions. I could give you like answers pretty easily, in that group. So you really should join that. And that way you're in there and you can just ask whenever you need to ask. Because I feel like I give somebody like help on something like that and it's like, well, there's not really like anything else to say for a while unless it makes a big move. Well, I guess that's fine. So if you don't use it, then don't worry about it. Everyone should be forced to use something they don't want to use. So I just think it'd be easier for you. Nah, there's no link here. It's not hard. It's nothing really to it. I'll try to get one in a minute for you. So like I look at this and I think about how, like, where would that be, I guess, on the big picture, and not knowing again whether or not this shift really matters. I don't know. I think it does. I think it matters a lot, but I also don't know for a fact, So what I'm saying is like I think this is the new top level. That's why I think this would be used anyways on the drop. So during this walk down, this particular period right here, there'd be multiple places that you would find, just like we did before, there'd be multiple places where you'd probably find that is consistent. And making it consistent on what I'm trying with the previous. We were talking about like when it drops and you've got kind of LSPYs and you can follow them down. That would be consistent. But I don't know exactly where to look, right? This isn't very helpful, Booksy. Well, the thing is about this, and I guess what makes it kind of easier or more convenient, and this is where I was kind of at yesterday, was that, and I haven't gone any further than this, was that this middle junction right here, which is like $22, that's kind of like the best guess that I have, and it really goes back to like where that split value is. I think that was just the appropriate valuation, right? And this was all just sort of interpretive in order to get to that point. And ultimately, when you look back at where it was when it crossed that marker here, you can see that the top was meeting at the previous value, and then the future, though it's low, it actually meets at the new value. So this makes sense. So the conversion, weirdly enough, does work quite neatly. It's not, because again, right here would be the center value on the new. And then right here would be the center value on the high, which represents the old, if that makes any sense. May not make sense. It should be a little bit above that. So this would be effectively like, I want to say the range, but this would be an efficient way of kind of understanding the possibilities of like direction and like how far things can go. Okay. In addition to that, when you look at the bigger picture and you see where this range is and like how we've built it out, you can tell that the lower ends of like the current area and then the bottom are essentially identical. And that's the weird thing about all this, right? Is that going back and looking at this chart shift, it's like the 246 marker right here ends up being where it goes to in the end. So the projection here would have been, oh, it can go to 246. Yeah, I get that. But when you look at the top, you can see that that's 1251. Like essentially just 1250. What does that mean, Mooksy? Is that a good thing, a bad thing? And then look at where this original marker is right here. That's the $9 mark. That's where the drop ledge is here when this drops in January. It also ends up being pretty darn close to where this top is. So at the current time, I don't know if it's appropriate to use the original drop values. It probably isn't to some degree because there's been dilution since then. However, I think you can respectfully use the current range setup and suggest that an implied move should have a similar kind of an outcome if it's going to make another big move to the upside. One right now that stands out is the $9.25 mark. Another one that is extremely interesting to me is the current setup, like where is it at presently? And again, you can see on these parallels, things get really bizarre, right? Because like I just shifted it down to here. And you can see that on these parallels, that's actually following along a parallel. We don't know exactly which one that represents, but it's there. I would say that that's probably the top. Like if you go back and you look at this motion right here from $20, and this is what I did at the end of I was kind of trying to get to this at the end of the last stream. I didn't quite get to it. We lost like half our viewers. If you drag this down to where the drop ledge is right here at like $20.50, look at where it is here at $3.18. I don't think it's a coincidence. I think it's just the way that it is, okay? And if I were to use all three of these, I'd probably find that also be true, although it would do something really bizarre to my chart, and I don't want to mess with that right now. So I've done this a couple different ways, and what I can tell you is that it seems like the main, I guess what I'm trying to get across is that this is indeed the main creek, and even though we've already kind of said and suggested, and I think it's not necessarily not true, I think it's just a matter of like which one you're using. This particular parallel, which comes back to here, this particular parallel probably is going to be the best representation of like a breakout level for us. Because at this point, we've iterated to a place where we actually hit it and then rejected. And it's about halfway. So it's like, if you look at a quarter system, it's about halfway. It also may be, and I'm not going to say this for sure, it may be that this represents like part of the iteration as well in that compression. Because if you keep dividing it in half, and I haven't really tried this, but if you keep dividing it in half, it could be that that's actually correct. Yeah, that looks pretty dang correct. That might be it then. Yeah, if you keep dividing it in half, you can see this break point right here. It's hard to see on this chart. So it's starting to get really messy. Let me zoom in a bit. So like if you take this and you divide this in half, this one would have jumped over that half, and then you divide that in half, it jumps over that half, so on and so forth. So that the motion for the iteration is more or less this, where it comes up, does the cell test, comes up, does the cell test, comes up, does the cell test. You can see that motion perhaps in a simplified way by doing it like that. That's fine. And then parallels, these parallels that I found yesterday, I was trying to figure out what they would do in the light of all these things because they're being used as well. So if I had a grid, you can start seeing the grid sort of form out on its own, those parallel structures. This could give you an idea perhaps of where that bottom could be. But again, if I'm using just kind of what I see here as a possibility, then 491 would have to be something that's important. It doesn't have to be the most important thing, but it certainly is important. It's absolutely being used. I don't exactly know to what degree its importance will be, aside from the fact that it's like an anchor here. Could end up being that that's all it is like an anchor point for a certain kind of move. Remember, it was like a 50-50 down to the 170 to like that particular level that they got. Wasn't 316, it was 295, but 316 was actually the top of that opening in July. So that 295 area was extremely important as well. That's one that I'm keeping my eye on, as is 419, but I don't think those levels are necessarily going to be, to me, like they represent like middles. So I would look at them as like the middle of the bottom area, the middle of the top area. I would not look at them as, so I'd look at them as like liquidity centers. And that's what I see here is it looks like a liquidity center, and then this looks like a liquidity center. I would not necessarily look at them as like support and resistance per se, although I do think you're going to use them. And then I would look at current setup and like where these things are. This struck me as extremely interesting because back here, when you look at this breakdown, this is 675. And this is when it dropped off, and it has its last support here before it starts going down. Really the last point of supply before it starts dropping off. If you were loading up shorts, that's the place you would do it, right? That drop off at 675, the translation here, if you look at where this ends up being, this ends up being where we kind of hit the top, and it is pretty close, over here in July or June. And this is also the same place as you can see on that translation, although maybe it's slightly different. On this chart, I make it look like it's like kind of perfect, but it might be slightly off. But that's right where it is, like the 686 level. That's really, really close to where that projected target was. Like, where was this going to go, right? That's the upper, we could call it a, whatever you want to call it, you know, some kind of a moving average, some kind of a standard deviation. It was right there, and it had moved away from it and then came back to it. And you can see it represented in the bars chart shift that I have. So it's possible that one's extremely significant because it represents, as you can see, what appears to be the same liquid center level. So if I had to pick one out of many, if I had to pick one, I would suggest that the liquid center level, although it's not necessarily like a particular support or resistance, kind of looks like it might be here as a top. So, I mean, you could say it is, but the way that this has shifted, that means that if we had like a moving average right here that was kind of in the center, this moving average, again, as a, we'll call it a deviation, would also be in the center of the top parameter, the top bars pattern. So it should be like, again, coming through here. I don't know why that did that. Like double clicked. Kind of like this. And I'm willing to suggest that this, again, represents, to the best of my knowledge, this represents the probability that we're looking for. Like, where do we see this going in the future? I'm going to draw your attention backwards to something I did earlier, which I thought was kind of weird, but now I'm kind of wondering if it works the same. Because I did this earlier and I thought, yeah, that's kind of interesting. I just kind of left it at that, which is this actually looks like it interacts with it. Almost like the bottom resistance here is kind of like the resistance on the, so if you had this deviation, if you will, I don't know how it would look, guys. I really have no idea. But let's just say it's like right here. But this kind of represents where that is, perhaps. Yeah. And I think that works because then this trajectory on the bottom, weirdly enough, is kind of changing the trajectory, which I guess makes sense. That's not really that profound. The idea that this would change this proportionally actually makes a lot of sense. So I'm making it sound like magic, but it's not really magic, is it? It's just kind of the way EMAs work. As it moves up, typically this moves with it, but if it's a little bit delayed, like in this case, the moving average is delayed. It takes time. That's how you get the jumps. Otherwise, you would never jump. It would just always run equally away from it, right? But I could definitely see this as a possibility as well. I mean, it's possible. So I can see like that here. So I guess what I'm trying to say is the fact that this is consolidating on the upper echelon, and we're going to get to the lower one. We have to address that too. Can't just have one or the other, right? You got to have both. But the fact that this is kind of consolidating here, I think it could be a signal of maybe what's to come. Although I don't, again, know exactly what that means for the future because it kind of makes it look like it's way out here in like March or February. February would make some sense. That's come up quite a bit. And then in addition, it's kind of like, well, yeah, but this also just broke down like here. So who knows? Could be right there, you know? Right there in October, right? Maybe. This is a bit of a puzzle for me. I'm not sure. If I were to do just the breakdowns, I'd probably use that. And suggest that, yeah, it could be up here. It almost doesn't matter, but I would say that you could use these guys as well. And that's what we're kind of doing anyways. That one looks different, doesn't it, than this? And maybe the last point of impact here ends up being where it is. I'm not sure. Regardless, the consolidation here around this marker and the consolidation here around the same marker makes me think that the 675, which you just pushed down off of, is probably going to be the main target. Because again, this is like the liquid. That doesn't mean it couldn't go higher. And I think that that's where we have to kind of go back and look at maybe like this middle to say it could be a maximum of like 9. If it extended beyond that, it has a massive push. I don't see why not, because it did the same thing back here. You know, if this were to push up at that high, I don't see why you couldn't have it go, you know, up to like $9. And then, yeah, much like before, maybe it comes back down, right? And we settle here somewhere. That doesn't phase me. I think that probably would make sense. That's in line with what we were expecting before in previous times. If you use the 2020 build out, this should have been somehow used, and it hasn't been looking like it's going to get used. I got to be just straightforward about it. Like this marker, weirdly, this should have been used. And I had said before, like I thought it was going to go up earlier, so it would hit this marker and kind of interject. If it really was like 2020, this would go into here a little bit, which would be like $12. I'd have to go back and just say, man, it could be like what happened in the macro where this goes down, it looks really bad, and then you get a huge like 1-2 that eventually comes back up and meets it. Because remember, on the big picture, if you go back to the early 2016 days and whatever, before it made that LSPY and all that jazz, there's that separation, right? And where it ends up going and where it ends up, being on the bottom. This is pretty close. This would be a similar setup because you're going from here, and that's roughly where it's going to be on the bottom, and it ends up going exactly to that point. Granted, it could be there, or it could be slightly lower if we use a slightly lower one, which would be here. That would be a potential for spring. It's possible. Both of those work. We already know that they work because they're effectively the same idea. But then here you'd have the similar idea where you'd have up and down, which gives you a threshold of 1250 to 925. Perhaps if you were using, again, the build out from 2020, you wouldn't use this beyond like a second top. So you wouldn't use it as the first top. You'd use it as a second top, which would suggest that it does get there, maybe even in January, based on where this is. Because again, it would peak here. But that's about as far as it would go. And that roughly is like January and maybe slightly beyond. And then we're starting to get pretty close to that midpoint, right? That was the level that we talked about. And I'd said before, like 1960. I still think that's correct. I still think it's this zone right here that represents that region. And I think that ultimately does work with this build out. Nothing has changed that dramatically. What you would say, though, is that there's probably something that happens in the middle, because if you're using the 2020 build out and this is that drop ledge and they work it out in that slower manner, you'd have to see it break A4, which is kind of a given. I think some folks have said rightfully so that 4 could be a big problem. I agree. If it's going to distribute, that could be a huge issue. If you go up to 4, you could drop really far. And who knows, man? This could be one of these crazy bonkers banana situations where we go like $4 and then it chills out and then it dumps down into that that vote and goes all the way to 2 and then or 180, and then it goes up. I have no idea exactly how it work out. But I would say that, sure, like that could make sense. It's like a gigantic phase B bottom or a gigantic bottom of like a huge cat ear. I could see that happening and like pumping to 4 on earnings and then dumping backwards. That to me, as frustrating as that sounds, like I could definitely see why that might be the case. Especially if they do have some kind of agreement to allow them to sell shares up here. You could see something like that with this other company between these two variable numbers at 295 and 491. This area right here in 4 is like the squishy middle, and it is indeed the area that we've traded the least. So if you're going to have locally, aside from way down low, right? If you're going to have a distribution, it does kind of make sense. So this is going to be one of those problem zones, I think, that we run into probably. I'm not saying it's definitely going to do that. I'm just saying I could see it happening and causing a lot of chaos and confusion before like a drop. Certainly a possibility. Well, and we're never going to go up. Never say never, right? It may not go down that low. Some people have said, again, that and I've said 180 here because I think it's on the chart. I think you have to present both of these. But really everything, if you think about it, like everything below 246 should be considered a spring. That's why I'm not so sure that this is actually going to be hit. Like based on the number for that particular offering, it might be. But I feel like that same thing applies back in 2020. It's just really hard to know like how low it's actually going to go there. Because in 2020, it just barely moved below here, but those are pretty similar levels all the same. And it just dips below the bottom by like a penny and then it runs. It could have gone lower. And I don't care what anybody says. It definitely could have. So, there's all kinds of like maybe little threats here and there. This doesn't have to go up that high to distribute. It could pop up to like $3 and just never make another high, right? Could kind of avoid going above 318. And that's another thing I'm kind of like, it's hard to say. If this starts widening outward, you could see some pretty insane motion right here, because those iterations are almost done and usually it starts getting kind of haywire. So I'm not going to try to like guess exactly what happens here per se, but I will say that the overall picture shows large amounts of interest in this region, which is around 675, large amounts of interest in this region, which is around $1.80. And I can see that being sort of the main go-to. I really can. And I think that the overall picture here may be a little bit confusing, because you're like, well, this is not simple. You said it was simple. If it gets over there and it holds support, it should just go. Sure. Yeah. If it were like a perfect world, then that's what would happen. If it has a distribution, it's going to get over it, look like it's going to go, and then it's going to stop and just not go. Just because you get the buy-in here does not mean that it's guaranteed to go up there. It's a decent chance, if it starts layering up, that it's going to take itself out, one step at a time. But I'm shrugging my shoulders, because you really just we just have no idea exactly what's going to look like. In theory, again, this just has to dip below the floor and then it can go. But how it gets there, there's a lot of bigger question marks in my brain. I'm like, yeah, there's a number of things that could happen, I suppose. All right. Enough humming and hawing about that. I think that this is a pretty decent way of understanding, like the way this moved right here. I think this could be a pretty decent way of understanding where that might be in the future. Like that directionally heading up into January could definitely be where this ends up. I don't see it or foresee it going significantly higher without a reaccumulation. And so if you were using the model that I was for the S curve, I actually had been using not this, although that looks pretty darn close, but it was like there's like a drop right here, and there's a huge peak in selling volume. Anyways, I had multiple trends right here going through the middle. And what was freaky about it yesterday is after I did all this stuff, I started looking at that and then looking down at this, and I was like, man, there's just a lot of trajectories that are matching on these like fake charts. They're just like out there in the middle. And I was talking about this earlier, like this really odd to me, But then again, if you're building it out as if you would a kind of like a Bollinger Band or something, maybe it makes sense that this is the reason this is targeting this in a future tense, starting to set up that curve, so to speak. But this is the way I had done it previously, and there's 3 gaps right here in the middle. And there's 3 gaps, like 1, 2, and then the third one's kind of low. It's like down here somewhere. I'm not going to be able to zoom in and see it, but it's down there. It's like right here. And they effectively are like a 1, 2, 3 on fairly equally spaced apart. And I told the chat group, I said one of them was, I don't remember the numbers now, but I did it right. One was like exactly October 31st. That one was like spot on. I'd have to go look because I think this is kind of off. One of the latest ones was like January 6th. And then there was another like in between around earnings. So those were the markers for what I would say is the most likely places. And if you miss October, I don't like I said it before, I'm not really a big fan of missing October because I just at that point I'm kind of like, who knows? We could be doing this easily going into the new year with the iterations. I just can see how it expands out slowly. It's really hard. October 31st or October 28th was kind of like one of the first ones. It's not showing it right here. This looks like September, which looks wrong. But the overall picture was that this region right here would be a high probability zone. So anyways, when I look back at it, I think that that's pretty likely. And when you look back at 2020 and you look at where that setup was and where it eventually goes to, this would be a very subdued version of that, because in 2020, although it does come down to the low part there, and it's pretty similar. You can see these are like overlapping quite a bit, and they're not really overlapping in our current time frame, which I also find. But you can tell that at some point into this peak, right? We talked about this a minute ago, that this comes across. It's essentially identical. But it also means, from a just sort of a tertiary glance, that this would be the top that you'd later go back to. We don't have, again, perhaps as much of that samity as we did in 2020, where it's kind of like perfect, but it would suggest that 12 up to maybe, if these are the two peaks, 1220 up to 1546. But on average, you'd probably say like 1330, which is really close to the previous peak. It looks like we're crapping out again. So rough day, man. I really wanted to do this, but it's just not working out. And I hate it because I really wanted to go from this to like show you the micro one more time. Maybe it'll work. Maybe it won't. So I do think this could be a potential for spring targets. I think there's two main ones in mind. I don't think, even though I know you guys are like, well, if you're doing equal parts, then you should say this could go down to $1.28. The truth is that's totally reasonable. But that when I go back and I look again at the previous example, it already kind of has been in the lower range. It has not, however, been in the upper range almost at all. So there's a clear imbalance there. Like when we talk about ranges, I mean, what I'm trying to say is that like, if you look at the overall picture, it's similar to 2020 in that the original target, this is what happened in 2020, is the original target down low, it spends a lot of time in this area, which is what's happening right now. It does not in 2020 spend a lot of time in the top area, which is also what's happening right now. And we've barely even gone there, right? We barely tapped it with that main push. So if I use like the way it's set up in 2020 versus now, it actually is pretty similar, but it would be essentially like, well, you've already spent a huge amount of time building off a bottom. So the idea of it going all the way down here just because we see that, maybe, but just like 2020, I feel like, I don't know, man. I think it just needs to test that low and then it can kind of advance. And then it makes perfect sense that this would then come up to the upper portion of this, which is where we have little to no trading. It may make perfect sense even more when we get up there, because if this drops down, let's say to 239 or 237 and then goes, this is going to have like a new marker here. And then you're going to have like a new range, essentially. I think that could be really interesting. We'll see what happens. But it may end up marking off to whatever degree what the range looks like when we get to the top. It would not surprise me. What does it look like just to drop from here to that liquid center. You know, I did these numbers on my own time yesterday, and my chart was really messy, if you guys remember the beginning of the stream. This leads to like 215. I remember looking at this one, 215. That one's pretty logical. That would be like, again, us going down into earnings or something. It's really right on the nose. And that would represent, again, the same as us dropping to this value here from 675 down to 491. So if you're talking about just like translating values, that's a possibility. And I could see that being a really important variable to hit. And then when we get up here later, needing to back up to 491. Seems reasonable since that's where most of the shares are traded. I think it's pretty straightforward. So that equivalency would be 215. I didn't put 215 on my chart earlier, but we could. I just don't really know what else to do with that right now. It's like right here. So it doesn't, to me, it doesn't really make a huge difference. Like anywhere down here would be acceptable for a spring. I just would want to see how it rebounds and then ultimately gets back up to the top. So right now we're at, speaking of rebounding, we're at 280. I don't see this as being a game changer just yet. I've kind of rebuilt my chart. I had it on the chart earlier with the iterations. From what I can tell, to me, it looks essentially the exact same as like the previous iteration. And thus far, unless it comes back above this marker here and really builds out a support, there's no reason to, there's really no reason to get too excited. I guess what I'm trying to say is that unless it kind of builds out here and then breaks out over the top, even that could be really dangerous. There's not really any reason to get super excited. This drop does represent a breakdown, and it's a possible spring action, but I can't really hold my breath about it. Because the only thing it really broke was this trend right here. So that is similar to what happened in 2024. It never went really, really low. The problem with this, at least as far as I can tell, is that I can't, like, it's hard for me because I'm like, I can't really see where the spring is. Like, it'd have to close above this bottom at 279 and like hold that support. That's a possible spring right there, because if that dropped low and then came back up into this range where that original low was, I'd still say maybe over 280. It's possible that you could have some crazy price action come Monday if this were up to here, but it's not something I'd hold my breath over. I'd kind of buy in expecting that this could be a disappointment. Just saying. Like, I have less confidence because of how large this is, because the other iteration that I had drawn out could go for another week or 2 weeks, because it could chop this way and just not actually break out. It could kind of break out of this little local creek and then just sort of chill. And that's the risk that you're going to take if you try to assume that it's going to go. So this may indeed cross up. And if it holds here, you might think, well, couldn't that be like a bullish signal? Yeah, I mean, it could be. It's still below this creek, but then again, it was the same way in 2024. It dropped low, it bounced a little bit, but it just kind of sat there. It didn't recover during regular trading hours. It never did. It just sat there. It hit the bottom, bounced, and just kind of chilled. And then Monday, it was like gone, right? And you're like, what the heck happened? It'd be like if Monday we opened up the chart and it was way up here, it would go up to like probably 350 and then drop pretty hard, but it would come back down to retest this creek. Go again. Like, that would be a similar motion. I'm not saying that will happen, but it would be very similar. That'd be pretty darn close to what happened last time. They have to hold above this creek That's the only way it would work in like some kind of a weird gap down or gap up motion. So I would not personally be buying in here thinking that it's going to go to the moon just because. But I would say that, yeah, I mean, this is fine. This is still below average. It's just that my thought is that like right now it's walking down. And if the iterations keep going, it's going to be sideways here and then do it again, you know. Man, we're really chopping with this stream today. It would be up to about, I think I said it earlier, 291. And then it would potentially go down again and just start all over. And this time it's already got the weakness, so it probably would have an even worse off drop going into November. So you just got to be really mindful that like, yeah, like it's going to be one of those moments where, of course, nobody really sees it coming. But if this can